Hey everybody, my name is Allison Ostrander and I am the Director of Risk Tolerance here at Simpler Trading. Thank you so much for joining me in this video. And today I actually want to talk about Apple. Now, looking at the daily chart, right, this already looks like it's starting to move. And for those of you who don't know me, there's something that I like to do called a $500 challenge. I post this not only to Simpler Trading, but I talk about it on my Twitter and on Twitch for those of you who want to maybe follow along with that. And so this is a setup we actually had earlier in the week. We already took profits, but the reason why I want to highlight it is because I still think this is a really great setup that we might be able to participate in. And so if you've kind of missed the move, right, let's talk about it and talk about why this still looks good to me. On the daily chart, we had started to form this consolidation here on Apple. Let's zoom in some. Right? We started to see this consolidation. We had some things on our lower indicators resetting, and we had this nice squeeze starting to print. Support held quite nicely. We actually made a great bullish divergent bar the other day. The following day, we started to print a bullish signal on the compound breakout tool. Momentum's been picking up. And so, today, of course, we stair step higher. The trend is starting to roll up and continue with that bullish strength, right? We have a lot of room on momentum to actually continue this trend to the top of the axis. For those of you who are not familiar with this indicator, right, this is one where you can usually trade it up towards the top of that axis, and that's how long the bullish trend typically lasts, like back here, for example, right? This trend moved higher. We start to get to the top of the axis, and that's when Apple decided to take a pause. So there's a lot of room for this to continue to move if it wants to. This is a very nice bullish signal on Apple and the compound breakout tool, so that's valid with everything that we're seeing. And on the daily chart itself, the price the last 2 days is moving outside this outside blue line, and this outside blue line is the third deviation Bollinger Band. And so when you see a move outside not only the second deviation Bollinger Band, which is this inside blue line for me, but also the third, the outside blue line, it usually causes a potential case of FOMO. So what do I mean by that? Well, it means that people who are not long, who typically see the price moving like this when it exceeds this level, they get a case of, oh my gosh, I need to be a part of this move, and they jump in. And on the flip side, anyone who was short is saying, oh my gosh, I need to cover, right? This is starting to move against me. And so what happens is you either get one of two things as long as it closes in a strong green bar like this. You either will see consolidation, right? The price will basically stay within this range and it's hanging out as those buyers and sellers kind of fight against each other. Or it will actually continue to stair step higher due to that quote unquote FOMO, right? So today we stair stepped higher and we're making another third deviation, what I like to call a Bollinger Band snap. So what does that mean? That means either, once again, we'll either probably consolidate within this trading range for the next few days or actually continue higher. When we pair that with the low momentum, right? There's a lot of room there. When we pair it with the bullish signal here and the squeeze, all of that's looking pretty good to continue, right? With the trend and everything else. But let's add on to that the weekly chart. The weekly chart, there are a few things I really like about this chart. One, for those of you who are not familiar, this is what I like to call my true low indicator. And so it can sometimes help give you a discount buy, if you will, like help determine what a quote unquote true low might be in the price on a pullback and allow you to get in maybe at a discount buy from where you typically would, right? If you're a buyer in a bullish trend like I usually am. So we got this set up not too long ago. With that, it held support. It maintained the overall bullish trend, which is great. We have a squeeze. We are just this week starting to print the bullish signal, which is likely to print on Friday. So we know on the weekly chart when that starts to print and go, it can usually create a nice long-term trend signal to follow through on. Momentum here as well as low and has room to move higher. We held support beautifully. We followed through on the bullish divergent bar. For those of you who aren't familiar with that indicator, that usually allows you to determine a potential higher high. I usually give it within the next 3 bars. This one happened, of course, within the next bar. The next week, we followed through with that higher high. But it looks like it could keep going, right? The squeeze in play and everything else with the true low signal that's what I usually like to see. That can, really create some good long-term trend buy signals to jump in on. So when we pair the daily chart setting up quite nicely with room to move higher, we look at it compared with the weekly chart where it looks great for room to move higher, right? All of this is telling me that there's still a lot of strength to the upside. Um, let's see if the 4-hour squeeze started to fire. The 4-hour squeeze technically started to fire, but even here, look at this setup. Bullish sentiment, momentum's building up. This bar is about to print actually, but it's a bullish divergent bar, so that in itself means that maybe, later this week we'll follow through with a higher high above 157.87, right? Could see maybe a move up towards 160 or something. But with the squeeze just starting to fire, right, there's room to push that on top of the squeezes that we just have on the daily and the weekly chart. Not counting, if there are some printing on other time frames I'm not paying attention to, right? So because of that, I still think there's a lot of strength here. Now, there are a few things of caution I want to point out. First of all, this week in particular, we might still get a bit of a pullback because there is a lot of open interest hanging out around 155. Let me pull this up. So here's this week's expiration. You can see usually it's about thousands. Maybe you'll sometimes get up here closer to the 50,000 range on open interest. But this 155 strike earlier in the week had over 155,000 open interest. That's huge. That's a lot of people holding that strike. And because it was out of the money, right, I'm inclined to believe that that was a lot of short sellers holding that, right? They were shorting at 155 thinking Apple was not going to break it this week. And I could be wrong, right? Maybe some of those people are buyers. I know I certainly was a buyer. But if it was, right, a bigger hedge fund or something like that that's shorting at this level, they're feeling the pain right now. They're concerned. So the question is, does this pull back into 155 and kind of stall there so that those shorts can still kind of expire and, whoever shorted it isn't going to completely fret? Or are the market makers just going to annoy those people, right? And we stay rooted above that this week? That's kind of the question. If we can pull back this week to 155, I actually really like that as a potential buyback in opportunity to play this longer term trend later on. But even if we don't, I still like this to the upside. However, I would obviously not trade it this week, right? I don't know if I would get that short-term pullback. So I'd go out to January. Now, I'm already in a trade on this in the Mastery. I actually am in several different trades throughout my accounts. Some of those we've already taken profits on, like the $500 challenge account, right? That was a shorter dated Apple. We took a profit on that. But I still wouldn't mind getting into this. So if you do decide to jump into this, there are just a few things I would say be mindful of. One, give yourself the time. So go out to at least December. Honestly, at this point, I'd probably go out to January because I personally would really want to try and take advantage of this weekly squeeze and setup. I think ultimately, I don't know if this will happen by January, mind you. This might take a couple months, but ultimately my next big target to the upside is 175. If we can get a similar point move up from our last true low like we had, or from our last run ups from the squeezes firing and stuff, I think 175 is a pretty valid level to go up and test. So I want to try and give myself time to play into that level, which means by going out to January, right, it gives me a couple months to try and start playing the trend to the upside. Now, if you want, if capital is not as much of an issue for you, right, the 0.7 delta to me looks great. That's 150 currently. That's a nice psychological level that we have now turned into support. So ideally, we're holding that overall if we were to see a pullback. And it's 1072. So not a bad, spread obviously because it's Apple. It's a nice psychological level. You're already in the money, have some intrinsic value built in. And of course, if we do continue to stair step higher, because of the delta, right, that's going to see a pretty nice increase. A lot of open interest there too. However, if you are, right, a little bit concerned about your capital, or maybe you're like me and you trade a smaller amount of capital, I do not mind in this instance going out of the money to play for the room higher. So I still like the 165 strike. That's about 350, right? The idea is if we could go up to 175 as the target, that pushes this strike 10 points in the money, might allow for a profit that way. If you want to go with a vertical spread, then I wouldn't mind going to December. You could do something like maybe the 160, 170. It's about a $2 cost basis. It's not too far away from the price getting into those levels on the long strike. And it still allows you a pretty nice reward of about $7.90 from here. So there are a few different ways you can look to play this, but ultimately the few things I would keep in mind is, one, give yourself plenty of time so that if it does pull back, you can sit through the pullback, right? Maybe even build into the trade, which leads into my second point. Please, please, please only do a portion of your normal capital risk. And the reason why I say that is because this is nowhere near support, right? Let's be completely frank. It's not back here at this perfect entry like we had last week into this week. It started to move. But the squeezes, the momentum, the bullish signal on the compound breakout tool, all of that is telling us that there's room left. However, it doesn't mean that it can't pull back to support first before it gets to the next run up. And currently on the daily chart, support's at 151. So by only starting with a portion of your normal capital risk, this is a great way to be able to build into the trade without having to have that negative dark side emotion come in while you see red on a pullback, right? Meaning, if my normal capital risk, let's say, is $1,000 per new trade, then more than likely I'm not starting with this long of the money call because that's all my capital I'm putting into the new trade right off the bat, and this is not a good entry level. Instead, I would probably start with like the 160, the 165, maybe do one contract of the 160 or 1 to 2 contracts of the 165. And the idea, of course, is if we do end up pulling back first, then this isn't my normal total capital risk that I get into of 1,000. So if it pulls back, I can either add more contracts at this strike or potentially get in at a higher strike at a better cost basis, but ultimately still just build into that $1,000 of capital risk, right? That way, one, really not anticipating it whatsoever, but if Apple, horrible news came out, if it just decided to fall apart, well, one, you're not, managing that full $1,000 at this entry point, which, mind you, probably, wouldn't jump into in a normal circumstance because it's not near support. Two, right, if it does pull back but holds, then it gives you the opportunity to jump in at a much better price entry level. And like I said, that negative side of emotions, what I like to call the dark side of trading for my Star Wars fans out there, you don't feel that negative side too much because it's not your full capital risk that you're watching on this pullback. It was only a portion of it, right? So it shouldn't feel as weighted down to you as if you put all 1,000 in up here and then had to sit through that pullback before potentially the bounce. So I will say, right, the move has started to occur, but I think there's a lot of room left on Apple. I'm just not sure about that 155 level for this week. So, even here at this level, it's not to say you can't jump in here, right? The squeezes are still valid. There we go, right? There's still room on momentum. It's just be aware because of how much open interest is at 155. We could see, right, some of those shorts, some of those hedge funds try to push the price back down towards that level into the close this week. And if so, that might actually make a good buying opportunity. Otherwise, if you're like Allison, this thing is taken off. Those people who shorted at 155, are royally fill in the blank, right? They're not happy, if you will. Then you, by all means, feel free to jump in here and play it to the upside. But like I said, personally, I would just be doing a portion of my capital risk. That way, if it does continue, great, I got my foot in the game and I'm playing it up. But if it doesn't, if it pulls back, then I'm not going to be as stressed out about it because I know I can build into that full capital amount. So thank you guys for joining me on this video. I hope it helped you out. Hopefully, maybe you already took some profits on Apple already, but like I said, there's a lot of room left that this can continue. So either wait for the better entry, the pullback entry or consolidation to support, or if you want to jump in now, right? Just be mindful of the capital, buy yourself time. But let's see where it goes from here. I'm certainly excited. As always, guys, may the trade be with you for my Star Wars fans, and I look forward to talking to you next time. Bye, guys. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.